The next important topic on our outline is Elliot waves. Now, Ralph Nelson Elliot organized his research, and the publisher helped popularize Elliot wave analysis. Elliot believed that one business cycle consisted of a 5-wave motive or impulse pattern and a 3-wave corrective component. A motive or impulse pattern consists of 5 waves representing a distinct trend in one direction. Now, this image shows us the impulse pattern, while the image below shows us the corrective pattern. A corrective pattern consisting of 3 waves represents a counter trend in the opposite direction to its preceding impulse pattern. Now, a corrective pattern must obey the following constraints: wave A, wave B, and wave C. Now, Elliot identified several other wave patterns such as zigzags, triangles, flats, and so on. But the impulse and corrective patterns are the most important when analyzing trends. The following is a short description of the psychology during each wave. For wave 1, the shock or currency pair makes its initial move upward. This is usually caused by a relatively small number of pairs, so bulls dominate the pairs. This causes price to rise. Wave 2, at this point, bulls consider the stock or currency pair overvalued, so they take profit. This causes the stock to go down. However, the stock will not make it to its previous lows before it is considered a good time to buy again. For wave 3, this is usually the longest and strongest wave. The currency pair has caught the attention of the mass public. More people analyze the currency and want to buy it. This causes it to go higher and higher. Now, this wave usually exceeds the high created earlier. Take note, the impulse contains 5 waves. The 5 waves move up or down, and that is a bull or bear market. The first wave is a large trendy move. The second wave is a counter trend pullback. The third wave is another big trendy advance. The fourth wave is another against the trend pullback, and the fifth wave is again a large up move. So there are 3 trendy moves, bullish or bearish, within the Elliot wave pattern. Now, wave 1, wave 3, and wave 5 are trendy moves where price goes purposely in the direction of the overall trend. Separating these trendy moves are 2 counter trend moves, which are wave 2 and wave 4. They provide the chance for the market to recharge for the next trendy move. Now, this image shows you a bullish wave pattern. The yellow boxes indicates the 3 impulse move, which is the wave 1, wave 3, and wave 5. Recall that within any trendy 5-wave pattern, there are price moves that head in the direction of the overall trend. You might have noticed that I used letters A, B, and C instead of numbers compared to the impulse waves, which I labeled with the numbers 1 to 5. Now, we labeled counter trend moves A, B, and C to keep them separate from the trending moves with the numbers 1 to 5. Let me use this chart to explain Elliot waves more. This is USD/CHF on the 4-hour time frame. I earlier told you that the Elliot wave consists of 5-wave movements, and I explained how that happens, and I also told you that we have a corrective structure which is always in the opposite direction to the overall trend. Now, okay, let's say if the Elliott wave is going bullish, if the overall trend is bullish, the pullback, which will be the trend opposite to the bullish trend, will be in the opposite direction. And I told you that in this 5-wave move we have 3 impulsive waves and 2 pullbacks, and the pullbacks always, well, most of the times consist of 3-wave moves itself, A, B and C, and the overall trend should be 1, 2, 3, 4 and 5. Now let me use these charts to explain what I meant. This is USD CHF, like I earlier said. First of all, let me plot out some things that I've noticed on this chart. If you go to tradingview.com, you have a lot of tools to use. If you come to this point, it says patterns, and you can see there is the Elliott impulse wave tool here, which you can use, which it's 1, 2, 3, 4 and 5. And also we have the Elliott correction wave A, B and C. Now you can use this tool to plot out the pullbacks, which it's most at times 3 waves, A, B and C, and this tool can be used to plot out the overall trend. Now if I go back and I check for my trend, regression trend, and I click from this point down to this level, it will automatically draw my linear resistance and linear support, giving me my bearish channel. When price dropped from this place, from this zone down to this level, it consolidated. It means that price was trying to recharge for the next impulsive move, and after this consolidation, price pushed higher. Now you can use this rectangle box to plot out your consolidation. This tool can also be used to separate consolidations from trendy moves. Now back to Elliott waves. Like I earlier told you, you can come to this tool. Now if I click on this tool, I will be able to use this tool. Looking at this chart here, when it dropped and after the consolidation here, it pushed higher. That means it broke this resistance. From this point, I'll have my wave 1, which we said it's part of our Elliott wave pattern, and we have the first pullback, which is our second wave, and then we will have our third wave, which is our second impulsive push to the upside, and then we also had the second pullback. Here is our first pullback, this is our second pullback, this is our first impulsive wave up, our second impulsive wave up, and this pullback give us our fourth wave, and then after giving us this fourth wave, it gave us the last wave, which is the fifth wave. Now looking at this, you can see that we have ourselves a perfect Elliott wave pattern here. From this point to this point, it gave us a first wave, the first pullback gave us a second wave, the second impulsive push to the upside gave us a third wave, which you can see it's labeled 3. Then our second pullback gave us the fourth wave, and then we had our last wave. I also told you that the second wave is usually the longest wave and the most impulsive wave, because at this point buyers and sellers all knew that this currency pair will likely push higher, and no one was willing to sell because this level has been broken already. The trend was earlier bearish. When it consolidated and broke above this resistance, market structure was broken, now giving us a bullish trend. That was why price push from this level after this breakout and this retest of this broken resistance, which now became support level. It gave us our second impulsive wave. Now for the pullbacks, they always happen in 3 waves with A, B and C. If I go back to the 30 minutes time frame, I'll be able to find my pullbacks A, B and C. I'll have to scroll back to the zone. Now back to the 30 minutes chart, you can see that here already is a resistance level, and then from this point to this point we had our first wave. And if I should use the A, B and C corrective tool, we'll discover that we have our A, B and C reversal pattern. From this level to this level, we have our A, we have our B, we have our C. Now this most of the times happens during pullbacks. Now from this level to this level is our first wave. Then we have our pullback A, B and C, and then we'll have another push to the upside. Take note of this. From this level to this level, which is our first wave, you can also find another 5-wave move within this first wave. Now if I should use my 5-wave tool again, and I try to look for my 5-wave Elliott wave pattern from just this push from here to here, I'll find my first, second, third, fourth and fifth wave. Let's say from this point to this level is my first wave. I have my first pullback, which is our second wave. Then the third wave, which is our second impulsive push to the upside, which I also said it's usually the longest, and you can see it's the longest, and then the fourth wave, and then fifth, and then it gave us our first wave. Now looking at this, you can also find your A, B and C corrective structure from these pullbacks continuously. It's like the way onion bulbs are. You find a layer on top, another layer, and then you find another layer, and so on and so forth. And that is mostly how Elliott waves work. From this first wave also here, you can also find 5-wave pattern. That is if you go back to smaller time frames. Now on this 30 minutes time frame, we have our 5-wave pattern just from the first wave that we earlier had on the 4-hour time frame. And if I should remove this, from here to here is our first wave, our first pullback, our second wave. You can also see A, B and C corrective structure from this A, B, C, and then the last wave up, and then from here to this level is our first impulsive push to the upside. That is on the 4-hour time frame. If I go back to the second pullback, this is our second push up, and this is our second pullback. I can also find my A, B and C corrective structure. From this level we have A, B and then C, and then our last wave up. And from this last wave also, you can also find your 5-wave push again. This is how Elliott waves are. If you keep changing time frames, you can keep finding your 5-wave patterns from this zone, from this support zone to this resistance here. As you can see, here is a resistance level that price respected. after price give us the last wave, give us, it met a resistance here, resistance, and then it dropped. Now from this last wave you can also find 5-wave pattern. Also click on the 5-wave again. From here you can see you have let's say 1, 2, 3, 4, 5. This is how it works, as simple as that. Now back to the 4-hour time frame. If you use this in conjunction with your support and resistance, you will be able to find nice trade entries and you will make profit. Now if you also use let's say support and resistance, chart patterns, and your Fibonacci tools and your candlesticks reversal signals, you will find nice trade entries in the forex market. We have this support level. After it broke, came back for a retest now, which now became our support level, pushed higher, came back, met this support level, pushed back, support level, pushed back. You can see it respected this support level a couple of times, and here also is a zone which after price pushed higher, it met with this resistance and then it dropped. It then pushed higher, giving us a second impulsive push up, which is our third wave, and then came back to retest that broken resistance, which is now our support level, and then we had another push up. This same process you can also find on other charts, not only USD CHF. You can also find them on monthly, weekly, or daily time frames.